there will be a forward guidance review, because we have to align with the strategy review.
We see the tax agreement as being strongly in the interests of all members of the European Union and the world.
I've dreamt of since I was a kid, and it was completely and utterly awesome.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Monday, the 12th of July. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Well, Christine Lagarde tells investors to prepare for new guidance on monetary stimulus next week. We'll bring you my exclusive conversation with the ECB president. Progress on taxation. Ministers from the G20 endorse a global corporate tax deal. Now that deal's done, Janet Yellen will press EU officials to reconsider their digital tax plans. And billionaire Richard Branson touches the edge of space on his long-awaited Virgin Galactic test flight. But can Jeff Bezos go a step further in his Blue Origin craft next week? So happy Monday, everyone. I know there are quite a lot of hangovers here in England, probably Italy as well. It's been a pretty busy weekend also in Venice. I got freshly back yesterday after speaking to Christine Lagarde, who told investors should prepare for new guidance on monetary stimulus next week. Now, the ECB president told me that the July 22nd Governing Council session, previously expected to be uneventful, will now have some interesting variations and changes. Lagarde also says she's only guardedly optimistic about the recovery.
Like everybody else, I see this Delta variant and the impact that it has on people and on expectations. So I'm guardedly optimistic because the numbers are really good, because we still forecast a strong recovery that will be sustained in the next quarters. We have, as you know, revised our assessment of risk. And we see them as much more balanced than ever before since the beginning of the pandemic. But of course, we see that uncertainty on the horizon, which is caused by this Delta variant, which needs to be tamed with accelerated vaccination. You know, of sitting here in Venice on the occasion of the G20 that was concluded, if I haven't heard the word vaccination 1,000 times, I haven't heard it at all. Everybody is on the same page. It has to be accelerated vaccination in order to resist the uncertainty that will be caused by more and more variants, because that's the way this virus will evolve and morph into new forms.
And so was there a lot of worry in the G20, and are you very worried that actually another variant, or even this variant, scuppers the recovery? Could we actually deviate, or would it just take longer to have the same kind of recovery?
You know, for the moment, we are not revisiting or reducing projections. So we're still seeing this V-shaped recovery and a good improvement on all fronts. It's no longer manufacturing is buoyant, but services are lagging behind. Services are also picking up, and the social distancing removal that took place throughout Europe has helped a great deal in that respect. We see, you know, catching up. We see savings being used to a certain extent. We're not overly optimistic on that front, but we see some of that. We see some pent-up demand, not as much maybe as some would have expected. But as I said, it's all the signals are good, but we have this uncertainty that needs to be addressed, and needs to be addressed with something that is not economic, that is medical, and that has to do with the people.
Talk to me a little bit about the strategic review. I mean, this was a very big week for the ECB. What does it actually change in how you can achieve that 2% target?
Well, the big change is that we have revised our inflation target, and we are very committed to an inflation target. So we're not, it's not a vague, loose, ambiguous aim. It's a target. We want to reach the target of 2%. And that 2% is also a symmetric 2%. And we are looking obviously at a medium-term orientation, but symmetric 2% is what has been the major change. What do we mean by that? First of all, it's simple. 2%, you don't, wonder whether it's close to but below. No, it's 2%. That's what we want. That's what we're committed to. Second, it's solid, because it gives us the right space to maneuver in terms of monetary policy, and it's a good. It probably reduces the welfare cost that would be associated with high inflation. So simple, solid, symmetric. And by that we mean 2% is not a ceiling, very important compared with what we had. And we also say symmetric means that we regard both deviations up or down, below 2%, above 2%, as undesirable. And the most important thing also is that we recognize the constraints resulting from the effective lower bound. And we recognize that in order to resist those constraints, we have to respond especially forcefully or persistently, and we accept that as a result of that, it may imply for a transitory period that inflation is moderately above target. So it's this package that from a pure monetary policy point of view has been critically important. There are other changes that are really interesting too that I'm happy to talk about.
Yeah, which we will. But I mean, if we spend a bit of time on that, so what is transitory? Is it a couple of months? Could it be longer than a quarter? And
transitory means that we are prepared to tolerate a period of time. We're not going to induce it. We're not going to deliberately go in that direction, but to accept that it will be the result of what is most important, which is the specially forceful or persistent action that we will take using all the tools we have. So I cannot tell you, in terms of how many months, how many quarters. This is something that is going to be judgmental, and that will bring the Governing Council to use its discretion on the basis of the circumstances, on the basis of the trajectory, as to how transitory will be applied.
This is what the markets are trying to figure out, right? They're trying to really understand if what you said is hawkish or dovish, to put it in.
I'm an owl, okay? So I'm not really interested in hawkish versus dovish and this ornithology business. I think what matters is the simple objective that we set for ourselves, the solidity of it, the symmetrical aspect, which is affirmed without any ambiguity, and the fact that we recognize the constraints, the pooling aspect of the effective lower bound, and that we are prepared to take the especially forceful measures or persistent measures because we are close to the effective lower bound.
Well, that was the ECB President Christine Lagarde in our exclusive interview. I just came back from Venice actually last night. It really made my heart sing. It was the G20, everyone was there. It was bright skies, and we were also getting ready for the football. Coming up, free, simple and safe. Will the ECB push ahead with a digital euro? They'll decide on whether to explore the idea on Wednesday. More from our exclusive conversation with Christine Lagarde next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, there's, of course, the markets that we look at. There's futures in the US turning a little bit lower. Central bankers are also waiting in uncharted territory for digital currencies. The theory of costless, universally accepted, but also safe means of payment. Now, China and the Bahamas were the first to experiment with the creation of a digital yuan and the Bahamian sand dollar. Now, the ECB is also considering how a digital euro could be created to complement cash. I spoke with Christine Lagarde about the process, which she said could take a long time.
In the next couple of days, actually on my Bastille Day, the Governing Council of the ECB will decide whether to go into this exploratory phase, which we believe will take a couple of years. It's not something that you can just, you don't flip it as a dime. You have to really look into all the technicalities, the design, how you make sure that the banking sector is actually part of the story, and because we're not planning on disintermediating the banks, they have to be really part of the story and part of the action. We have to look at the privacy issues. We have to look at a lot of issues that are in a way beyond the realm of central banks. So we need to collaborate with the other authorities, such as ministers of finance, European Commission, parliaments, because in due course it will touch people's life in a very intimate way. And what we've heard from the people is that they want privacy to be protected. But at the same time, we need to make sure that it's not accelerating anti-money laundering or the financing of terrorism. So we have, on each and every aspect, we have to strike the right balance. And so that will take a couple of years. And in a couple of years, when the work has been completed, the Governing Council will have to decide green light, red light, there we go or not.
So it's not a given at this point?
It's not a given yet. My suspicion is that the Governing Council will be very supportive to explore for the next 2 years. And hopefully will commit the budget to do that, because it's not without some cost. But then in 2 years' time, whether it's a let's go and have a digital euro or not, I think will be then decisive.
Madame Lagarde, if you look at the markets, and this, we're trying to figure out exactly what the market is looking at, and I don't know whether there's a problem with how they look at the real economy, or whether, especially the bond market, is looking at, things in China that makes it difficult to get out of COVID-19. But what's the relationship that you have with markets right now? Do you try and figure out what they're looking at, or is it kind of very separate?
Well, we try to understand their thinking, their rational, their expectations, and clearly, I don't talk to markets myself, and I refrain from that, because I think this is my duty to stay out of it. But we do have people who are on the markets. I mean, you cannot be a big purchaser without actually having some proximity with how markets operate and what is their thinking, what is their rational, what is their expectations. Expectations in particular are critically important. So we have market surveys that market participants participate in, and that we look at. It's not the only component that we look at. We look at all sorts of indicators and survey to understand what they see, what they understand of us. So it's a bit of an interesting
feedback loop almost.
Constant feedback loop. But when we are here riveted and determined by one objective, which is price stability that we have to deliver for Europeans. That is the most important thing. Markets obviously play their part, and we have to be attentive to how they think and what they expect and how they see things. But our objective is price stability, and that is what prevails over anything that we do. And we've just decided that we will deliver 2%, which we define as price stability.
And you're confident that you'll be able to
We have to do it. We have to do it. The treaty tells us price stability. The Governing Council unanimously says we target 2%. We have to use the tools, and we have a big toolbox to actually deliver that 2%.
So is that
much healthier to actually be at 2%. We don't want to be in that deflationary situation.
So is that really what's changed, actually, that you think compared to the previous era, you'll be able to achieve that target because of the strategic review?
I hear that music of, well, you have not achieved. And I also hear what would have happened had we not done what we did. It's all a story of counterfactuals. Had the ECB not been on the ball very quickly, very massively, we would have seen growth much, much lower than that, and the much deeper than what it has been. We would have seen inflation at much lower levels as well. So let's just make sure that the economy is favorably financed, that enterprises invest, employ, that people train and get the right skill set, and there is a very, very large fiscal support that is coming in with the next generation EU package that is now beginning to not only be raised but being paid to countries in order to become greener, in order to become more digital. That's a very important aspect of it.
But from where you're sitting, you're feeling good about it.
You know, it's difficult not to feel good sitting in Venice. And it's not difficult feeling good once you've achieved this sort of unanimous support of the Governing Council, with all national central banks around the ECB determined to deliver 2%.
I have to say, I was feeling pretty good being in Venice as well, especially in that palace. I had the history of the Doge, which I had forgotten since my school years. Now, the second part of my conversation there with the ECB President, Christine Lagarde, will have plenty more on also green bonds and green financing. After touching on the importance of adequately funding Europe's green goals, we'll also hear from Christine Lagarde's assessment of climate impacts and the central bank's plans when it comes to green bonds and the carbon market. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, fresh back from G20, fresh back from Venice. Now, the ECB Strategy Review last week introduced climate change considerations into policy, and now the President, Christine Lagarde, has urged governments to agree to a unified carbon price, and also says that central banks expect to buy more green bonds. Here's more of our conversation with Christine Lagarde.
This has been a big push on my part to make sure that central banks, which are not the key drivers of that bus, actually does its part in fighting climate change. A limited part, not in the driver's seat, but its part. So we're going to do a few things. Number one, we're going to analyze in much more depth the impact of climate change and the impact of transitions by the corporate world, and the impact of regulations, changes in the whole framework that will be decided by those who are in the driver's seat, governments and parliament. So we need to analyze that very carefully. We need to model that into our models. We need to anticipate all of that, because it has an impact on the economy. Whether you look at inflation, whether you look at output, whether you look at cost structures, it has a significant impact. So that's number one. Number two, as far as we are concerned, we need to change the eligibility criteria that are in place in order to accept collaterals, to give them financing. And in these eligibility criteria, we will have to include, as soon as it's sort of put together and organized by the Commission, by those who are for Europe, by those who are in the driver's seat, all the information, all the disclosure that is required, and that will apply to how the value of corporates and enterprises in general is affected by climate change, and sooner or later it will also include what impact enterprises and corporates have on the environment itself, and soon it will include biodiversity and the threats to it. So eligibility criteria will change, information disclosure on an auditable and consistent and complete basis will be required, I think, and we have a timeline for that. We have an action plan. We know when we deliver. The third thing that will happen is that I think we will be buying more green bonds simply by virtue of the fact that there will be more green bond issuances in the future. We have been a big purchaser of green bonds ever since inception of green bonds, and we will continue being so. I think we buy 20% of all the green bonds that are available on the markets at the moment. That's a big chunk, and there will be more green issuance going forward, and I hope that Europe continues to have a very strong foothold on this particular market and develops on a much more cohesive and European-based manner in that respect.
I mean, do we need a unified carbon price? I mean, this is what everyone says, but will we get it?
That is highly desirable. Yeah. It's not something that is in our remit, but it's, all economists and pretty much everybody everywhere agrees that if you want to account for externalities, you need to price it. So if we emit pollution of all sorts. It's not just CO2, it will be methane, it will be lots of other things. That has to be priced in so that risks are properly reflected. You were talking about risks. That's something that we will also assess very carefully when we look at our balance sheets. Our balance sheets has a lot of sovereign bonds. We're not proposing to weigh in any shape or form by reference to climate change those bonds. But the bonds, the corporate bonds that we hold, which is a very small part of it, has to be properly assessed, taking into account the risks associated with climate change.
Well, that was the ECB President Christine Lagarde speaking to me exclusively in Venice on the occasion of the G20. You can watch the full 25-minute conversation online at Bloomberg.com, but also on YouTube. Coming up, we talk a little bit more about inflation targets, we talk about growth, we talk about the Delta variant, and we talk about space. This is Bloomberg. Christine Lagarde tells investors to prepare for new guidance on monetary stimulus. Next week, we'll bring you our exclusive conversation with the ECB president. Also, progress on taxation. Ministers from the G20 endorse a global corporate tax deal. Now that deal's done, Janet Yellen will press EU officials to reconsider their digital tax plans. And billionaire Richard Branson touches the edge of space on his long-awaited Virgin Galactic test flights. But can Jeff Bezos go a step further in his Blue Origin craft next week? Well, good morning, everyone. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance Early Edition on this Monday, the 12th of July. Now, there's quite a lot going on in the markets as we had that interview with Christine Lagarde. We also look at the edge of space. But first, with the Bloomberg First Word News, here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The British government is expected to issue guidance that people are to continue wearing face masks in indoor spaces, even after restrictions are lifted in England on July the 19th. Vaccine Minister Nadhim Zahawi has told the BBC that face coverings will not be mandatory, but there will be an expectation for people to wear them. Over in the US, infectious disease expert Anthony Fauci says ideological rigidity is preventing people from getting coronavirus jabs. Vaccination rates are lagging in southern and Midwestern states. Fauci made the rounds of morning talk shows to reinforce the administration's position that the vaccines are indeed safe. And it's not coming to home, it's going to Rome. Italy won a dramatic Euro 2020 final against England and penalty kicks after a 1-1 draw. England scored their first goal of the match at 2 minutes, but the Italians were in control for most of the rest of play, with Leonardo Bonucci scoring the equaliser in the second half. Extra time did not change much, and the final shootout was ugly, with Italy missing 2 kicks and the English a heartbreaking 3. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. I wish actually I could be in the newsroom to give everyone a big hug. It was a pretty difficult game, and just like that, at last minute, the penalties. Now, G20 finance ministers back a plan that will see a minimum global corporate tax rate of 15%. So far, 132 countries have signed up to the framework. The agreement is, of course, a further boost for the plan signed up to by G7 leaders in Cornwall earlier this year. Now, finance ministers in Venice expressed confidence in the viability of this plan.
We endorsed the key components of the 2 pillars on the allocation of taxing rights on profits of multinational enterprises and the global minimum effective corporate taxes.
These large companies cannot be set apart from the efforts that we all will need to make to fund, to pay the additional costs that have arisen due to the response to this pandemic.
We are getting rid of this race to the bottom on taxation. This is clearly a tax revolution. I strongly believe that 15% is not enough. We should do more.
we continue to try to understand the reservations that countries have that have not signed on. In some cases, I believe they can be addressed, and in the run-up to the Leaders' Summit in October, we'll be trying to do that.
Now, for more, Bloomberg's Maria Tadeo joins us live from Brussels. So, Maria, basically, you're in Brussels where there's a Eurogroup. So a lot of the G20 finance ministers were migrating overnight or late yesterday from Venice over to Brussels. The deal is done, but, you know, what does the implementation of it look like? And good morning, Maria.
Yes. And good morning, Francine. And yes, Francine, you know, we were in Venice, and that was a message that was repeated by all of the ministers, that this is a tax revolution, that 15%, and of course, the right to tax in the countries where the services are provided. But in terms of the implementation now, Francine, we're looking, as you know, now at 2023. That is the date that they've set out to have this taxation being implemented and begin to collect tax money into this. But we know that if you look at the track record on taxation, there has been many deadlines that have been missed in the past. There's the other issue here is just as to how functional and practical this will be, because the reality is 15%, that is a rate that already gets paid in a lot of these countries in Europe. As you know, Francine, also at the weekend in Venice, the French were saying 15 should just be the starting point, but that idea didn't really fly. It does seem that 15 is really, really the upper bound. So, of course, we're looking at the rate, but also the timeline going forward, which, again, we're looking at least 2 years before we actually see that coming into practice.
Maria, Janet Yellen, of course, the U.S. Treasury Secretary in Brussels. How much will she push for this digital tax?
Well, you know, Francine, that's another very good point, because we do have this deal that was brought forward by the OECD, agreed by the G20, but the Europeans are also wanting to push ahead with an EU digital levy. Now, again, over the weekend in Venice, Francine, when we spoke to pretty much every finance minister there, you know, they really struggled to explain the rationale of this tax. For the U.S. delegation, it's also very difficult to sell this back home. You know, they're going back to D.C. with not just one new tax, but two, one European, another one from the OECD. So we are expecting, of course, Yellen to try to push for a delay into this or just scrap it altogether from the EU. And of course, Francine, I have to say congratulations for your great interview, but also for the Italian game. I know when I've seen you, you're a big football fan. So, you know, complimenti.
Grazie, Maria. I mean, I feel like you were cheering on Italy more than the whole Italian nation. So I commend you for your efforts. I know you were like, you know, very into it, including almost losing your voice. So Maria, great effort. Maria Tadeo there in Brussels covering the Eurogroup for us after a pretty long night of football. Now, Christine Lagarde says prepare for new monetary stimulus guidance next week. In the exclusive interview she gave to Bloomberg, the ECB president told us that the upcoming Governing Council session will have some interesting variations and changes. Now, as for the central bank's pandemic bond buying program, Lagarde also says it may be too soon to talk about scaling it back.
Now is not the right time to talk about exit strategy, because we are still forcefully delivering under these exceptional circumstances using exceptional tool, which is the pandemic emergency purchase program, which I expect to last at least until March. And possibly to transition into a new format after March.
Well, joining us to discuss the ECB and the G20 meeting is Patrick Armstrong. He's Chief Investment Officer at Plurimi Wealth. Patrick, thank you for joining us. First of all, how much more clarity do markets expect the ECB to give on the tapering? Are they now, you know, could markets take comfort from the fact that actually they could have more tools simply because of the inflation target being raised and leave it at that?
I think markets take comfort from that. It's moderately, she would say owlish, I suppose, but it would be classified as dovish is what I'd say. In average inflation targeting, they're almost moving in that direction, targeting the 2%, which Lagarde seems unequivocal that she thinks they will achieve. It's obviously going to be difficult, and Europe's not really done that in recent decades. But she was pretty clear that the emergency purchases will go till March, and then probably bond purchases will continue just under another name is what I would take from that.
Patrick, what will move the markets more in the next couple of weeks? I mean, we're going into earnings season, and I guess we need to figure out whether profitability is enough to support some of the valuations that we saw there. Is that going to kind of upfront all of the conversations that we had on inflation concerns?
Well, they'll be running in parallel. I think earnings will dominate over the coming weeks. Everyone is very optimistic. I'm sure companies will report great earnings. Consensus is for 60% earnings growth for the United States, 24% for the median company coming off a very low base. But there's also been some margin expansion. The question is, will these great numbers be enough to propel the market forward? And I think great earnings are probably already priced in. If you don't have the incremental fiscal thrust that you're going to get from infrastructure and all the forward-looking earnings guidance, I think that'll probably be deciding the direction of markets from here.
Patrick, how much volatility? So we saw bonds actually move quite extensively on the back of concern that the exit strategy from COVID-19 wasn't exactly what was expected in China. So it seems that the market, especially the bond market, sees things before certainly economists or the real economy does. Do you follow the bond market or the equity market as a benchmark of something ugly potentially happening?
It's dangerous to say, but I think the bond market's wrong on this one. I think there's a growth scare right now. You've seen PMIs rolling over a little bit. China's slowing down. China actually had to cut their reserve ratios in an effort to boost some liquidity to the market. But in the developed world, it's the consumer that drives the economy. And 70% of the US economy is consumption. You've got pent-up demand, excess savings, incremental growth from reopening. I think there's going to be strong wage growth. If you look at how difficult it is for companies to attract workers, the biggest issue in the NFIB surveys is the ability to attract applicants for their job openings. So I think that leads to higher wages. I think you're going to see strong job growth. So I think it's a growth scare right now that pushed yields low. I think yields will be moving higher as the market sees the second half. The recovery does continue based on very aggressive monetary policy, and I think some fiscal thrust will come in there as well.
Patrick, did you actually buy anything on the dip? I mean, we also have this headline from the Bloomberg terminal, which I'm looking at from home, which is wonderful. ByteDance shelved IPO plans after China regulators' warning. This comes from press reports, but is there a read across for a lot of the technology stocks? Are you bullish or not on those?
We haven't bought any of the Chinese technology stocks. They've been terrible performers over the last 6 months, and they are looking cheap now, but you don't know the direction of the winds from what Xi will be doing, what China will be doing. TikTok obviously is heeding a warning from China. They're not going to ignore it the way Didi did and saw their stock collapse and their apps pulled in China. So ByteDance definitely has some very valuable assets, intellectual property, selling AI to other companies. I don't think they're in a rush to IPO. They'll do things hand in hand with what China wants them to do. But it's hard to really want to own these big Chinese tech companies, given the uncertainty and the volatility that the Chinese governments and regulators place on them. So it's hard to get clarity on that. We probably won't. I don't know exactly what the end game China's really moving towards. And until I have a good handle on that, I don't think I'll be buying the companies.
Is there something unusual that you're buying, Patrick, right now? I don't know whether space, because of Richard Branson or the edge of space has captured your imagination, if there's a markets play on that.
Not for me, just because I'm a bit traditional. I look for earnings, I look for cash flow. Those kind of companies that are selling the dream are a bit out of my remit almost. I look for earnings, cash flow, revenues. I've been buying companies that are cheaper than the market in equities. And the biggest risk for me is not growth, it's a multiple contraction. So the S&P is more expensive than it's ever been on price to sales. I'm really positioning my strategies towards companies that are trading at a discount to the market. So my equity fund trades at 14 times earnings versus the market at 17 or 18 times forecast earnings. The companies that are really cyclical, you can pick up for 5 and 6 times earnings. So Maersk, the shipper, is trading at 4.5, 5 times earnings and cash flow. ArcelorMittal, I think, is going to be a big beneficiary of fiscal expenditure. It's trading about 5 times earnings. The auto companies are down at those low single digits. So I don't think we're at an economic cliff. Those kind of companies are really pricing that in. And I think we probably have a reflationary backdrop for longer.
Patrick, thanks so much for the wisdom and insight. To Patrick Armstrong, their Chief Investment Officer at Plurimi Wealth. Now, coming up, it's a touchdown. Yes, we talk about space. We were just talking to Patrick about whether he was involved in some of these stocks that were selling dreams. Rocketman Richard Branson back on terra firma after his historic trip to the edge of space. We'll have the details next. This is Bloomberg.
I've been practicing some words to say to kids down on Earth for some time, and once I'd done those words, just being able to unbuckle and then just take off and look out of these massive windows. Then the spaceship was upside down, and take in the Earth from space. It was something I've dreamt of since I was a kid, and it was completely and utterly awesome, and one of those dreams come true. And I still think that I'm going to wake up any minute, and it was all a dream. It was just extraordinary.
Well, you're here. You did touch back down. You said that the feeling of weightlessness is indescribable, but will you at least have an attempt for me?
It's just the most. It's just incredible. I mean, it wasn't just the sort of floating, but then looking at the other three beneath me, because you are floating as well, and then looking out through these gigantic windows back at this stunningly beautiful Earth below. This, like pristine sky, the strength of the blues and the blacks, and realizing we were in space, and I've never, I've always sort of pictured what it was going to be like. I mean, like the ride up there, the ride back. I never realized that the whole experience was going to be so vivid, woo!
But beyond sort of the satisfaction of your own goals being achieved, what does today symbolize for the company and also for all those children that were present earlier?
Well, look, for the children, we've just got to get building as many spaceships as we can, as fast as we can, so that one day those kids will have the chance to have a similar experience to what I had. And that we will do. We also launched this giant global raffle today, so that two kids for just $10 for a pair of tickets. If they could win the raffle, they can go up. But that money will hopefully enable many people to be able to go up who could never have dreamt of going to space.
Well, space travel is taking off after billionaire Richard Branson's long-awaited test flight to space bolsters the company's plan to debut tourism trips next year. Now, the VSS Unity space plane reached a final height of more than 53 miles above the Earth before returning home about an hour after liftoff. So to talk a lot more about this, Matt Bloxham, our Bloomberg intelligence analyst looking at space and also media, is here. Matthew, I won't ask you whether it is really space or the edge of space, because that's, there's a lot of chatter, especially on Twitter, about what exactly we saw. But is this really the next frontier, because it kind of captures the imagination of so many people that we could see space tourism?
Yeah, that's right. I mean, space tourism is this kind of emerging sector, and I think this is definitely a really important step forward for obviously for Virgin Galactic, but for that industry too. And obviously next week when we see the Blue Origin launch, that'll be another step too. I mean, the Blue Origin's got kind of far grander ambitions, but certainly space tourism is part of what they're trying to deliver too. So an exciting new option for your summer 2020 destinations.
Oh, yeah, I don't know how many tests you have to do on the way back, though, Matthew, or how many PCR tests on the way up. What does it actually mean for, if you're an investor, what are you looking at? I don't know whether it's the components. I don't know how scalable this is, especially when you talk so much about, climate change and being more green.
Yeah, I mean, there's a lot of work going on propulsion technologies to make them more environmentally friendly. I mean, the whole industry is very complex, but there's some exciting technologies in there. You know, 3D printing is an important part of space travel, as well as all sorts of more kind of regular computer technology, AI. So there's lots of different aspects to this. I mean, I think for Virgin Galactic in particular, they're valued already at $11 or $12 billion. So I think for them in particular, it's about making the production of lots of these rockets we saw go up yesterday kind of economical and scalable, so that they can have, I don't know, 4, 5, 6 of those things operating at any one time, so that they can kind of get through hundreds of passengers a year and justify that kind of valuation.
But Matthew, does that make money? I mean, could they actually make a profit by doing that, or again, is it just billionaires trying to, up one another?
I think, well, certainly for Virgin Galactic, the ambition is to be a profitable company. I think it's going to take them a number of years to get there. I mean, if you look at the consensus on Bloomberg, they're expected to make some profit at the EBITDA level by 2024, but it's not much, and means that they're valued on a huge multiple of that profit. So it really is about going from one test rocket to a fleet of rockets, and bringing the cost of both the production of those rockets, making them reliable, and also the propulsion, so that you can actually make it profitable. But for sure, Virgin Galactic intends to be a profitable business.
Matthew, thank you so much. Matthew Bloxham, their Bloomberg intelligence analyst, joining us this morning, of course, on what we saw from Richard Branson, then looking forward to what we could see from Jeff Bezos. Now, it's coming to Rome. Italy wins a dramatic Euro 2020 final after England in penalty kicks after a 1-1 draw. We'll have that story next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, there is quite a lot going on, not the final or the Euros, but we heard that headline, of course, just a moment ago with ByteDance now shelving its IPO plan after the Chinese data security warning coming from politicians. Now, all roads lead to Rome. If you haven't heard yet, you must be living on Mars, but Italy won a dramatic Euro 2020 final against England in penalty kicks after a 1-1 draw. Now, let's take a look at the media reaction from both sides. Over in Italy, "We are Europe" is a headline from Il Messaggero, while Corriere goes with "We are the champions," the sign of rebirth, one country, one victory, a proof of pride. Now, a similar theme from Repubblica, proclaiming Europe is ours. A very different mood in the UK papers, of course, much more subdued. The Sun running with the pride of the Lions, both the Daily Express and the Mail actually running a photo of England's coach, Gareth Southgate, hugging 19-year-old Londoner Bukayo Saka, whose final penalty kick decided the game. I have to say, even everyone's heart, including the Italian hearts, I'm sure went out to that very young and talented boy of 19. Now, this is what the markets are looking at. So we're looking at a lot of the earnings season that starts, I think, at the end of this week or later next week. The future is a little bit undecided what to do, but certainly they're looking at any inflation comments from the Fed. They're looking at growth. They're looking at the variant, and we start looking at earnings as well. This is Bloomberg.
Given the persistence that we need to demonstrate to deliver on our commitment, forward guidance will certainly be revisited.
We see the tax agreement as being strongly in the interests of all members of the European Union and the world.
The threat to security is resolved by global cooperation rather than by balancing power.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong. On this Monday, July 12th, our top stories today. Shifting strategy. The ECB is preparing for a policy shift on stimulus next month. Francine Lacqua got the story in her exclusive interview with ECB President Christine Lagarde. Janet Yellen tells Europe, dump the digital tax. The Treasury Secretary says it would discriminate against American companies. And billionaire in space Richard Branson's flight may bolster Virgin Galactic's plan to start taking paying customers next year. I'm Danny Berger, alongside Francine Lacqua in London and Kailey Leinz in New York. Matt Miller is off today, no doubt sleeping in after that very eventful football match between Italy and England. And Francine, I'm really not sure who had more of an eventful weekend, those teams or you in your trek to Venice on more trains and more delays than I am sure you ever hoped or planned to. But you got the exclusive conversation with Christine Lagarde setting the agenda. So Francine, let me be the first to welcome you back to sad, rainy London.
Thank you so much, Danny. I have to say it was a pretty eventful weekend, but I was in and out of Venice in one piece, no casualties, but we did get some breaking news from Christine Lagarde. It was an interesting conversation because she seems to have put back July the 22nd, the next ECB meeting, back on the max, saying, look, we weren't expecting much, but the investors will now have a lot more details and tools on what the strategic review actually means for their inflation target and what they can do. So the market is looking at that, and then, of course, we have earnings season. It's back. How quickly did the last one go? We're back to earnings season. That could actually move the dial a little bit later on this week. So, Kailey, with those two, and then we have a little bit of breaking news also out of China with ByteDance. Futures seem to be fluctuating a little bit.
Yeah, futures are fluctuating, but it's interesting, Francine. Of course, that feeds into the whole China tech and IPO crackdown that really was making headlines last week and is again this morning. But nonetheless, it was a broadly positive session in Asia overnight. You had Australian stocks, Hong Kong equities higher. The Nikkei actually outperformed, up more than 2%. And yes, even Chinese equities were higher, up about 1.25% on the CSI 300. Of course, the other thing markets in China are weighing is the move on Friday from the PBOC to cut the reserve requirement ratio for banks. That is effective on July 15th and will unleash 1 trillion yuan worth of liquidity. So that is showing up in the bond market as well. We had Chinese 10-year yields now below 3%, actually 2.94%, which is the lowest since August of last year. And finally, in foreign exchange, I did want to note the Japanese yen is now fractionally stronger against the U.S. dollar, sitting at 110.11. But it is really one of the exceptions in a story of broad dollar strength in the G10 space today. And speaking of U.S. assets, of course, U.S. stocks did end last week at record highs, but we are looking like we may be set for a softer open at this point. S&P 500 futures down around 8 points. Also down is the 10-year Treasury yield by about 3 basis points, 1.33%. Yes, that is off the lows we saw last week, but still more than 40 basis points below the highs of the year. And as I said, it is a stronger dollar story. That may be part of what is weighing on oil. WTI crude now off more than 1 percentage point below $74 a barrel, actually at $73.69, Danny.
Yeah, when you have oil off, it's no wonder that a lot of the markets in Europe are struggling to post any gains as well, especially when it comes to the UK market down 0.5%. Of course, a lot of the oil majors live there, Kailey. But meanwhile, we see kind of unchanged with some of continental Europe. Italy outperforming the UK. I won't read too much into that given last night's match. But anyway, we are seeing France down about 0.3%. DAX unchanged as well. So a really uneven session so far in Europe. The headline benchmark number is up just 2 basis points. So basically unchanged as we try to figure out the different countries and sectors. Now, we are seeing both a weaker pound and a weaker euro. The weaker euro, significant here. It's only down about 6%, 6 basis points rather, versus the dollar. Of course, Francine, your exclusive interview with Christine Lagarde, really important for the direction of the euro, that dovishness sending it lower with that policy divergence. When it comes to the pound, the story had been the reopening, the lessening of restrictions come July 19th, but it is still weaker. Again, that stronger dollar that you pointed out, Kailey, really weighing on sterling. Finally, IAG down 2.5%. Francine, the weakest sector so far today in Europe is travel and leisure, despite the fact that the UK is set to confirm today that come July 19th, there won't be quarantining if you're fully vaccinated. You won't have to wear masks. But this just really shows us that those Delta variant concerns still are weighing on markets. Again, even on a day like today where we're going to get that easing up on restrictions.
Yeah, but Danny, I mean, I'm probably one of the last people to be quarantined because it's before, although I'm double vaccinated, it's before, of course, July 19th. The mask wearing is of critical importance. The other thing, of course, weighing on the markets or looking at the markets for later in the week is that all-important inflation report. And then, of course, Jay Powell has a semi-annual testimony, I think, to Congress. Now, ECB President Christine Lagarde putting investors on notice. She says they should prepare for new guidance on monetary stimulus within the next 10 days, on July 22nd to be exact, the ECB monetary policy meeting. She's also signaled that fresh measures may be brought in next year to support the economy. Now, we caught up with her in Venice at the G20 for this exclusive conversation over the weekend, and I started by asking about the new inflation goal.
You could argue that marginally, to the extent that in the past the inflation aim was below but close to, and that now we are saying 2%. It's marginally higher as a target, and therefore might take a little longer. But frankly, I don't think that this is what matters most. What matters most is the especially forceful or persistent, and the tolerance for, or the acceptance and the tolerance for the fact that it might result transitorily in moderate variation relative to target.
So what does it change for your July 22nd meeting?
Well, we have a framework. We have a new framework that is unanimously approved by the Governing Council, and we're going to look at, as we always do every 6 weeks, we're going to look at the circumstances, we're going to look at what forward guidance we need to revisit, we're going to look at the calibration of all the tools we are using to make sure that it is aligned with our new strategy. And I think that, you know, given the persistence that we need to demonstrate to deliver on our commitment, forward guidance will certainly be revisited.
Does it give you extra tools? So on July 22nd, it's actually a bit, I mean, it was always a big meeting, but it's an even bigger meeting because it's not only something technically, right? It's not technical change.
You know, it's going to be an important meeting because, number one, we're going to communicate differently. So what analysts, experts, journalists are going to see is a slightly different presentation of our monetary policy decision. And I very much hope that it will be clearer, simpler, crisper, to the point, and as little jargonic as possible. That's one. Two, there will be a forward guidance review, because we have to align with the strategy review that we just completed. And my sense is that we will continue to be determined by maintaining favorable financing conditions in our economies, because we want to continue to support this recovery that is underway. So yeah, there will be some interesting variations and changes, both in terms of the substance, because forward guidance has to be aligned with the strategy, and because the way in which we're going to communicate it will be, I hope, clearer than it was.
Does it actually give you new tools, this strategy review?
Well, in the strategy review, we do two things. One is based on the fact that our so-called unconventional tools have been effective in avoiding a complete collapse that we would have had as a result of the pandemic. We didn't have that. So based on that effectiveness, we consider those quote-unquote unconventional tools as part and parcel tools of the toolbox. So those, you know, whether you look at forward guidance, whether you look at asset purchase programs, whether you look at targeted refinancing, financing operations, or whether you look at, what did I forget in the process? No, that's it.
No.
And obviously on the top of our policy rates, including in negative territory as we have it at the moment. So all that is in the toolbox. And what we do, because we are planning for the next few years, at least I hope 5 years, we are saying that we reserve the option to create new tools. So that's, yeah, it's very flexible in that respect.
When's the right time to start talking about an exit strategy?
Oh, not now. Now is not the right time to talk about exit strategy, because we are still forcefully delivering under these exceptional circumstances using exceptional tool, which is the Pandemic Emergency Purchase Program, which I expect to last at least until March, and possibly to transition into a new format after March. That's what we see at the moment. But I think we need to be very flexible and not start, creating the anticipation that the exit is in the next few weeks, months.
No, but March. I mean, I guess the biggest concern. I don't know what your biggest concern in how we interpret central banks is that something happens, that inflation suddenly picks up and it's not telegraphed to the markets, and there's some kind of ugly event.
You know what? I wouldn't be so concerned about an inflation pickup, because there will be inflation pickup for sure. We are seeing it in most advanced economies and beyond, actually. And that is something that we regard as transitory, caused by energy prices, commodity prices. We are very attentive to the supply chain to see whether that mechanism is transmitted throughout the chain, from commodities and energy to producers' prices to consumer prices, and how the margins operate. And most importantly, we're looking at wages to see whether that is going to have an impact on wages negotiations, salaries, and all the rest of it. But for the moment, we are seeing that as transitory.
Well, that was the ECB President Christine Lagarde in some of our exclusive interview. Of course, we'll have plenty more on that conversation throughout the day and the hour. Now, there is quite a lot also going on, because I think we have Mr. de Guindos saying that the risks to inflation in 2021 are to the upside, but he does believe that actually everything is transitory. So, Danny, I don't know how it's playing out on the euro. I know that it moved a little bit, you're on the back of it, but again, July 22nd, the ECB statement on interest rates will be a big one.
Exactly. And I think in terms of Euro catalyst, that's the one we have to look at. I think the strength in the dollar means that despite that fantastic conversation and really important for the market, we're not going to get that much movement just because of the dollar strength. And to those headlines, I would also point out, Kailey, that Wiedemann, of course, said last week that the ECB wouldn't try to do an average inflation targeting, that even if we get that boost above to more than 2%, it's not something they're going to aim for after periods of weakness. So important to view those headlines in that context as well.
Yeah, and we're just getting one from Mr. de Guindos, a new headline saying an allowed inflation overshoot will depend on circumstances. So I guess what circumstances is the question. I do want to take a quick check now on some stocks moving in pre-market trading here in the U.S. because we have to talk about space. Yesterday, the billionaire Richard Branson, founder of Virgin Galactic, was on a test flight, not technically in space, not above the Kármán line, but still he could see the curvature of the Earth. And it was a really important test flight for the company's viability of taking paying tourists to space by its target of next year. That stock is up 8.6%. Another stock that is flying, even soaring today, is SGOCO, a Chinese consumer electronics company, really a penny stock, but it is now getting touted on Reddit. It rallied 280% on Friday and once again is up 55% in early hours on this Monday morning. But one more stock, Reddit stock, that is falling out of favor is AMC, one of your underperformers in pre-market trading, down about 1.6% before the bell, Francine.
Yeah, a lot going on, of course, in space. And we also spoke to Patrick Armstrong of Plurima, and he says he doesn't love, at the moment, these stocks that kind of make people dream. But at some point, if they can make it commercially viable, then maybe it's something that we should be looking at a little bit more. Coming up next, we talk about inflation targets, we talk about growth and the Delta variant with Steen Jakobsen. He's Saxo Bank Chief Investment Officer. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, Daddy Berger in London as well, Kailey Leinz in New York, and actually our Matt Miller is off for the week. Now, a lot of focus is, of course, on inflation. Still, when you look at stocks, there is earnings season as well. Then we have inflation, actually from the U.S., a big one. And then we hear from Jay Powell a little bit later on this week as well. Today, right now, stocks, futures, mixed as investors turn their attention to the earnings season. So joining us now is Steen Jakobsen. He's Chief Investment Officer at Saxo Bank. Steen, thank you so much for joining us. Now, I also had an interview at Venice with Christine Lagarde. We talked about July 22nd meeting and actually how much room this new strategy gives them to have new tools and to really try to push inflation. Do you think the market will look at all of this inflation concerns and growth for concern, or for the next 2 weeks they'll just be focusing on earnings to try and justify some of the valuations we're seeing out there?
Of course, it will be on earnings, it will be on the banks this week, but overall, I think it's an interesting message, and it's an extension of what we've seen from Lagarde and to some extent every single policymaker in the world, and that is that they are going to monetize the debt that the EU will issue in terms of green bonds, and that they will replace the PEP program with something just as powerful. So in other words, we're getting further fiscal impulses from both the ECB and the EU, and overall what we see is that the governments are taking a harder and harder hand in terms of regulating in citation marks both the rates of the market and the market itself. So it's a pretty sad testament that we continue to, at a time where we have all-time high stock markets, all-time high real estate prices, that the central banks continue to talk as if the economy is not part of the equation. The economy needs to be productive, it needs to have a reset, but it's not going to be what the ECB prescribes. So I'm very concerned about this formula continuing onwards.
Does that mean bond yields are likelier to go higher or lower in the near term, Steen?
It will go higher, because I think the burden of the forward trajectory of debt and the heavy hand by which governments and central banks will play a part is the reason why we, at some stage in the second half of this year, will have a catch-up effect. Don't forget that we had one-off measures in first half, particularly in the US. The general account rundown added more than $1 trillion to the economy. As a rule of thumb in finance, we say that 100 billion equates about 10 basis points of cut. So in other words, the US economy through the first half saw 100 basis points of cuts coming from this liquidity glut that we've seen. That is running out. We are even worse running into the debt ceiling, which runs out at the end of this month. And as far as I can tell from the Hill, there are no real deal coming up. So we will see the Treasury run down, the emergency funds, and overall the credit impulses, both in China and the US, is slowing down. I don't think the incoming fiscal is coming. I think the marginal rate has to go up.
So, Steen, a lot of potential risks you flagged there. What do you then say to clients who say, all right, I want to take on risk to some degree, I want returns? Where do you hide out then if you want those returns, but you're concerned about, be it the debt ceiling or mistakes from policymakers?
What I think you do then is to add to what is not a classic tool, but you add a bit of volatility at the low. We're trading pre-COVID-19 levels in terms of volatility. I want to buy, in our portfolio right now, we have 5% long volatility. I want to add a bit of inflation hedges still. I still think they're cheap. TIPS has been doing remarkably well. And then on the equity side, I think you really focus on what has been performing this year, which is logistics, it's 3D printing, everything, commodities, everything to do with the fact that we have a huge amount of elasticity in the supply chain, which is certainly underestimated by the central banks, and it seems to be underestimated by the market. So in my reckoning and the way we look at the market, we will continue to have the exposures as long as the market allows us. But we are adding, to some extent, fire insurances on the side to sort of mitigate some of that risk. It costs us a little bit of money in the short term, but overall, we had a great year with this kind of allocation.
Steen, thanks so much. I want to ask you about space, actually, and whether you're booking a ticket in 2022. I don't know whether it's PCR test or not, but whether you, as an investor, can take advantage of that. Steen Jakobsen will get you back on, Chief Investment Officer at Saxo Bank. Now, coming up, we'll talk a lot more about growth prospects with Vincent Reinhardt. He's former Fed official and now Chief Economist at Mellon. That's at 8:30 a.m. in New York. That's 1:30 p.m. in London. And this is Bloomberg.
is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Francine Lacqua and Danny Berger in London. Matt Miller is off today. Now let's get the first word news. And U.S. Treasury Secretary Janet Yellen will press EU officials to reconsider their plan to propose a digital tax. Yellen is in Brussels today and tomorrow after G20 finance ministers agreed on a corporate tax plan. The EU wants to impose its own tax on online sales. Yellen has indicated that could discriminate against American companies. In soccer, England's half-century wait for a major title will last at least a little bit longer. Italy beat England at London's Wembley Stadium 3-2 on penalties to win the European Championship. Less than 4 years ago, Italy hit one of the lowest points in its soccer history by failing to qualify for the World Cup. And coming up, we'll talk to Alexander Stubb. He is the former Prime Minister of Finland, for more on that corporate tax plan. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Danny Berger in London, Kailey Leinz in New York. Matt Miller is off today. Now, of course, a lot of the focus will be on the inflation data out of the U.S., and we have earnings reports, so we'll see if the markets recalibrate, maybe away some of the growth concerns, inflation concerns onto that. And then, of course, Danny will talk also about our interview with Christine Lagarde over the weekend. It was an extensive interview. I sat down with the ECB president for about 25 minutes, and we talked about the strategy review, what that means in terms of tools. And then we also talked about, how much more green bonds she can purchase through part of, again, this new strategy update.
Right, and I would point out we are seeing yields move lower basically in all of Europe today. We have a German 10-year yield that's at negative 31 basis points. And our MLive team points out, Fran, that that's really consistent with what you spoke about with Madame Lagarde, that we're going to have this policy change, that there's more accommodation. So we're definitely seeing that trickle through markets, not just what it means for Europe, Francine, but the entirety of central banks. Do they need to start looking at possibly easier policy as Delta concerns really sweep the globe?
Yeah, and I think Madame Lagarde said something about, being cautiously optimistic about the future, but certainly because of the strategic review, she could have a little bit more to play with to try and achieve that 2% inflation goal. Kailey, what else are you seeing on the markets?
Well, in the equity market, Francine, we are a bit on the back foot. In Europe, we can't seem to gain any kind of traction on the stock 600. Right now, the index is fractionally lower, although it is off session low, still down by a little less than 0.1%. And here in the U.S., after record highs to end the week last week, futures are pointing to a lower open. We're down about 8.5 points on S&P 500 E-minis. Danny was talking about how yields are moving lower in Europe. That is also the case here in the U.S. The 10-year Treasury yield now down about 3 basis points, sub 1.33%. We are a far cry from the highs we saw at the end of March. And then I also wanted to point out copper. Futures down about 0.7%. This likely has a lot to do with fears about a growth slowdown in China and what that is going to mean for demand. This is showing up in pre-market movers as well because Freeport-McMoRan, which of course is a base metals miner, is down by about 1.2%. And then I also have a bit of a rocket theme with my movers this morning. First, Rocket Companies, which is a mortgage company, is down about 2.2% after getting downgraded over at Jefferies. And then on to real rockets. Richard Branson, of course, the founder of Virgin Galactic, was on the company's test flight to space yesterday. Really important in proving the viability of actually taking tourists to space come next year. That stock is up 8.3% and seems to be giving a lift to Astra Space as well. This is a space services company. It's up about 4.7% before the bell, Danny.
Yeah, Rocket probably upset they're not getting that effective. Sometimes similar tickers move up higher. Maybe people mistake it as a rocket company. Probably a little bit bummed they're not getting that. Anyway, Kailey, I have a chart that's a bit of a counterintuitive move. It has to do with concern over the Delta variant. I also want to welcome our radio listeners. And for our listeners, let me describe to you the chart that I currently have up. It is two lines. One of them is about the stay-at-home stocks in the U.S. versus the benchmark. The other one is stay-at-home stocks in Europe. Now, again, for our radio listeners, the U.S. trade of stay-at-home stocks is easily outperforming the benchmark. But in Europe, we're continuing to see that stay-at-home, that COVID fear play underperform. So it is a two very different picture between the two regions. Perhaps in the U.S., this makes sense because you have the Delta variant surging in places that aren't as highly vaccinated. But in Europe, the Delta variant is also a concern, yet we're not seeing that stay stay-at-home play win out, Francine. But of course, this might also have to do with the fact that the U.S. just has bigger tech companies, better stay-at-home plays that are more growthy. And of course, we've seen some of that growth value back and forth over the past couple months.
Yeah, it'll be interesting to see what the U.S. Treasury Secretary Janet Yellen does and says when she joins the Eurogroup in Brussels today. Now, of course, over the weekend, G20 ministers endorsed a global corporate tax deal that now faces domestic political hurdles.
We endorsed the key components of the two pillars on the allocation of taxing rights on profits of multinational enterprises and the global minimum effective corporate taxes.
These large companies cannot be set apart from the efforts that we all will need to make to fund, to pay the additional costs that have arisen due to the response to this pandemic.
We are getting rid of this race to the bottom on taxation. This is clearly a tax revolution. I strongly believe that 15% is not enough. We should do more.
We continue to try to understand the reservations that countries have that have not signed on. In some cases, I believe they can be addressed, and in the run-up to the Leaders' Summit in October, we'll be trying to do that.
Well, joining us now to talk about the G20 and, of course, to talk about this tax deal, Alexander Stubb, director of the School of Transnational Governance. Of course, Mr. Stubb served as Prime Minister, Finance Minister and Trade Minister of Finland between 2008 and 2016, and more recently was also Vice President of the European Investment Bank. So, Alex, as always, thank you so much for joining us. And what a treat a day after the Euro final, but we need to talk about the tax deal first. If we have a digital tax deal that is really implemented, because we're right at the beginning of the timeline of when we'll see something significantly changing. Does it actually change the dynamic in a lot of these economies, or do you think it'll be pushed so far away that we won't actually get anything tangible?
I think it's actually showing a mega trend. If the markets are global, then probably fiscal and financial policy will have to be global as well. And I remember this whole debate about sort of corporate tax rates on a global level. Digital tax started pretty much with the Panama Papers a few years back in the OECD, pushing it hard, and it's basically coming home, to use the phrase, at the moment. I'm positively surprised that a deal was struck with plus 130 countries, and I think it will go further. I think Bruno Le Maire was on track there.
The other issue the G20 is focused on, of course. Sorry, Francine, go ahead.
No, I just wanted to see, thank you, Kailey. Alex, what exactly that means for, a country like Ireland. Do they actually have to fold up, or does it just create more tensions in the EU?
Well, I guess the case here is pretty much that you have the better part of 132 countries that have signed on. Inside the European Union, you have a couple of countries who are quite reluctant, for obvious national reasons, Ireland being one of them, Estonia, and then Hungary probably for rather different reasons. But at the end of the day, I think the mega trend is very clear right now, and the peer pressure is so strong that it's going to be virtually impossible for any European state as such not to sign on to this. So I think the direction is clear. There are just a few member states who are a little bit reluctant to the bitter end.
Mr. Stubb, Kailey here in New York. Apologies for the little mix-up there. The other issue at G20, of course, other than taxes, is climate policy. And when it comes to the carbon border tax, the EU says they're going to push ahead. The IMF says that's a protectionist policy. They're more in favor of a proposal like France's, which is just a floor price for carbon emissions. Which do you think would actually be more efficient and more fair?
I don't know which one will be more efficient and more fair, but I must say that the talk in town right now is about the general border tax. And I think it's going to be quite complicated to push through. The IMF does have a point there, but I think, for the general audience, it's also important to understand that what the European Union is trying to do here is to basically avoid climate shopping. So you produce something which emits CO2 in a cheaper place and then bringing in. So they're all trying to find the right balance here. It's not going to be easy, but the reason that I'm quite optimistic about both the tax issue and the climate tax issue is that we're trying to find global solutions to global problems. You know, these types of debates we used to have on a regional and national level, and now we're having them at the G7, the G20, the European Union. So the direction is clear.
So is peer pressure, in your view, enough then? You say that will bring Ireland, Hungary, Estonia to the table. Does anything else need to be offered to them to get them to agree to this tax?
Well, in my experience, it's always a two-level game or negotiation. So there'll probably be a couple of trade-offs on the way. What they will be, by the end of October, it's very difficult to assess at this stage yet. But Ireland does have a lot of vested interest here. For understandable reasons, but I'm sure a solution at the end of the day will be found. I think peer pressure is the way in which you go about this. I mean, a lot of people talk about, taxation is behind unanimity in the European Union. If it was majority voting, it would be different. In my experience, usually what happens is that you find a consensus. And that means that the countries that have a problem will be brought in one way or another, whether it's a qualified majority decision or unanimous decision as such.
Alex, when you look at some of the things that the ECB has to contend with, and it's trying to calibrate this growth with various European Union member states that have different things about where they should go, what should be the underlying mandate of the ECB? We know the target, we know the inflation and the strategy review, but is it trying to keep everyone politically together, or even working on climate change whilst trying to get to 2%?
Well, the simple answer is to watch your interview with Christine Lagarde and you get the actual answer. But the truth is that the ECB is, at the end of the day, an incremental institution. And the changes that it does, say, to the inflation target rate or the announcements that it makes on interest rates are very carefully calculated. It only deals rapidly in a crisis type of a situation, as we could see during the financial crisis and as we could see now with the PEP program during the COVID crisis. But I do think we're starting to see a shift in the general ECB policy, which in many ways is reflected also in a shift of the fiscal policy that we're seeing with the member states. The interest rates linked to inflation, linked to loans, et cetera, et cetera. So I do think that we're starting to see an incremental shift in the fiscal and monetary policy inside the Eurozone and therefore also inside the European Union.
All right, thank you so much for your time today. Alexander Stubb, director at the School of Transnational Governments and, of course, former Prime Minister of Finland. And coming up, the future of space tourism. More on billionaire Richard Branson's trip up to space next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later on today, Vincent Reinhart, former Fed official and now chief economist at Mellon. This is Bloomberg.
I've been practicing some words to say to kids down on Earth for some time. And once I'd done those words, just being able to unbuckle and then just take off and look out of these massive windows. By then the spaceship was upside down, and take in the Earth from space. It was something I've dreamt of since I was a kid, and it was completely and utterly awesome.
Billionaire Richard Branson there, totally awesome. Speaking yesterday after he made history as one of the first non-astronauts to actually experience space flight and, of course, also weightlessness. The successful test of the first Virgin Galactic's Unity spaceplane bolsters the company's plan to debut tourism trips next year. To talk about this a little bit more, it's really captured the imagination of so many people, although not without courting some controversy about whether it was really space or just below, is Matthew Bloxham, Bloomberg Intelligence analyst panelists. First of all, Matt, good morning. Is this a vanity project or can they actually make money out of it?
No, definitely much more than a vanity project. Certainly Virgin Galactic's looking to be a profitable endeavour. Over the midterm, there's still a long way from that. Still huge amounts of investment to go into it. But, I think this definitely takes them a big step forward. As you said, they're hoping to start clearing that backlog of 600 or so customers have already paid for their trip next year and, expand the fleet of rockets we're seeing on screen there right now. So it becomes a kind of a large-scale space tourism business.
And of course, Jeff Bezos is in on this as well. His flight, which he obviously, Richard Branson beat him to the punch on, will take place on the 20th, so about 8 days from now. How could it look different?
Yeah, I mean, for start, it's quite a different vehicle, whereas the Virgin Galactic is launched from an aeroplane, as we saw. The Blue Origin New Shepard is a more traditional rocket, if you like, with a capsule on top, but similar in terms of it's a suborbital experience, 10 or so minutes of weightlessness. But I think Blue Origin as a business has much bolder space exploration plans on top of that tourism angle. So, they've got the New Glenn, which is something similar to what SpaceX has already. And obviously, Jeff Bezos is looking to take his company to the moon and beyond, too.
You got to love this battle of the billionaires where, maybe one goes earlier, but the other one's saying he's going to go further into space. Bloomberg Intelligence, Matthew Bloxham, thank you so much for joining us. And I want to shift gears here a bit and bring to you some lines breaking across the terminal. From DD Global, reporting takedown of additional apps in China. They're saying specifically 25 apps that had been operated by the company had a violation. China confirming this as well. They're saying that this is going to impact their revenue. Of course, this comes on the back of DD already facing pressure from China and China putting pressure on U.S.-listed IPOs. We learned earlier also that ByteDance had shelved plans for an IPO, according to reports. DD down 3.4% pre-market. We'll stay on top of this story for you as well, and whatever else is happening in tech, too, as this crackdown continues. This is Bloomberg.
I'm guardedly optimistic because, like everybody else, I see this Delta variant and the impact that it has on people and on expectations. So I'm guardedly optimistic because the numbers are really good, because we still forecast a strong recovery that will be sustained in the next quarters. We have, as you know, revised our assessment of risk. And we see them as much more balanced than ever before since the beginning of the pandemic. But of course, we see that uncertainty on the horizon, which is caused by this Delta variant, which needs to be tamed with accelerated vaccination. Of sitting here in Venice on the occasion of the G20 that was concluded, if I haven't heard the word vaccination 1,000 times, I haven't heard it at all. Everybody is on the same page. It has to be accelerated vaccination in order to resist the uncertainty that will be caused by more and more variants, because that's the way this virus will evolve and morph into new forms.
And so was there a lot of worry in the G20, and are you very worried that actually another variant or even this variant scuppers the recovery? Could we actually deviate, or would it just take longer to have the same kind of recovery?
For the moment, we are not revisiting or reducing projections. So we're still seeing this V-shaped recovery and a good improvement on all fronts. It's no longer manufacturing is buoyant, but services are lagging behind. Services are also picking up, and the social distancing removal that took place throughout Europe has helped a great deal in that respect. We see catching up, we see savings being used to a certain extent. We're not overly optimistic on that front, but we see some of that. We see some pent-up demand, not as much maybe as some would have expected. But as I said, all the signals are good, but we have this uncertainty that needs to be addressed, and needs to be addressed with something that is not economic, that is medical, and that has to do with the people.
Well, that was part of our exclusive conversation with ECB President Christine Lagarde at the G20 in Venice. I have to say, Tom, you were missed. Our Tom Keane, co-anchor of Bloomberg Surveillance, joins us now. And Tom, it just kind of reminded us when we were on the road for the IMF. If you speak to different factions, then, you know, some are focused, of course, on inflation, the others not. But it was a nice overview on what the strategic review means for the European Central Bank.
Francine, it's just great how you jump over the elephant in the room. Did I get the memo that we were going to Venice? Wonderful trip, and I hear it moved the market as well, the conversation.
It was a harsh assignment.
With Lagarde there. I think it's an inflation, and frankly, Francine, it goes back to the Hotel Danielle and, you know, the 14th century, the Dandolo family and that is a fear of inflation. Let's look at what Lagarde is afeared of. And I would also suggest the Germans may be leading the way there. A spike up in inflation, EU inflation. Frankly, the U.S. looks much the same, except EU has touched near the zero bound 1, 2, 3, 4 times in recent history. And the Finman of Germany, Francine, suggesting that they are monitoring inflation at the Bundesbank.
Yeah, Tom, it was, you know, it was amazing actually looking at the history back to the 12th century and some of the Crusades, and actually how they used to store their value or store some of the money in Venice. And if you go back to the links between Italy and some of the other nations, including England, I'm trying to make a football pun, which is not working at all, Tom.
It's going
but,
great.
You know, the G20 were on the same page that it's vaccinations that will get us out of this, and then a little bit more thorny on digital tax and how we'll achieve, you know, unanimously trying to get that through in various countries.
Yeah, it's going to be really interesting. Richard Rubin in the Wall Street Journal today, Francine, has a substantial article on the difficulty of getting that tax act through the U.S. Congress. And I didn't know this, Francine, but Rubin suggested some of this one pillar, first pillar, second pillar process is going to be by treaty. I did not know that there's some treaty issues here, and that's a whole different thing in America. Francine, I'm sorry, it's a new crusade, you and me in Venice.
Yes, in the next 2 months. So, Tom, I'm looking forward to looking over the gritty palace, having conversations with newsmakers. Right. Tom Keane, their co-anchor of Bloomberg Surveillance, joining us. Now, it's going to be a busy day. It's going to be a busy week. This is what else we're watching today. I know, Kailey, you're looking at space and you're looking at Elon Musk.
Yeah, I'm looking at Elon Musk for two reasons, Francine. One is that he's going to be testifying in a court in Delaware today, trying to defend Tesla's acquisition of Solar City. Really, the question being, did he control that transaction and use it as a way to benefit himself? But the other reason I'm watching is I cannot get the image of Richard Branson and Elon Musk standing together in a kitchen yesterday at 3 a.m., Elon Musk barefoot. I love, Danny, a billionaire space entrepreneur bromance.
I know, and the best part of the picture, it's hard to see there because it's at the very bottom, is that his jeans go over his heel. Yep. And as someone who's very short and has to get every pair of jeans taken down, I totally feel that. Anyway, Kailey, I'm watching Didi, these reports that they've taken down additional apps in China. 25 apps so far, Francine. So that's the continued impact here.
Yeah, I'm also looking at the Eurogroup over there in Brussels. Our Maria today is all over that, and Janet Yellen will also be there. This is Bloomberg.